Welcome to the Edge Up Podcast, the show that helps you find your edge to level up your life.
Bro, on May 14th, we reached an all-time high on both MNQ and MES.
Yeah,
And
pumping.
kind of wanted to pull up a chart because this is pretty interesting. Like we always refer to higher highs or like lower highs as far as trend goes. So if you can see the chart, I'm looking at the high on May 11th and then the high on May 12th, which is literally like, within 24 hours, within a day. We see that it kind of makes this double top. So it doesn't actually create a higher high on May 12th here. So this is what I'm looking at. Is this? I mean, it's a beautiful double top. If you wanted to short this is awesome. But at the time, this on May 11th, that was the all-time highs. So I'm like, we like to use the anchored VWAP. So if we anchor the VWAP on May 11th, we could see that price begins to break back up above the VWAP on the 12th, and then it hits that most recent that high, and then it holds onto that all-time high VWAP on
Bang.
the 13th. Like it tests it. I mean, that's a perfect retest. And I'm looking at the 15-minute chart.
Gorgeous.
So all that to say is once price rejected the VWAP, volume weighted average, it's showing that the bulls are still above the VWAP. It's saying bulls are still in control on the 13th and the 12th, and we're going higher. So it went higher, at least maybe to that level on 13 at 74.53 on MES, right? So price could have at least gone there, but it doesn't, dude. It goes all the way up, and then it finally levels out on May 14th. So you got 2 days, essentially 2 days worth of just higher highs. But leading up to that, this is what I wanted to point out. Leading up to that, on May 12th at 7 a.m. to 4 a.m. the next day to the 13th, we're seeing higher lows. And like this is what I use on the 1 minute chart, like this is how simple price action is. And when price starts creating a higher high, especially you combine it with other indicators like the anchored VWAP, you could see like this is a perfect buy signal. And then now the question begs, like, right, I hear this a lot and we see it a lot with our members, is like when price begins to hit all-time highs, people begin to be more fearful, which is kind of like psychologically, it's so interesting to dive into because it's like we're at the best, and like it's just human nature to expect the worst. Like, oh, like you mentioned it, dude. Like when we're at all-time highs, people want to call the top. That's a little bit of ego there. They want to be right and like, oh, this is the top. Now we're gonna go into a bear market, or two. It's like, oh, it's fearful. Like what goes up must come down. That's such a like
Yeah.
a negative concept to think about. So like, I want to dive into that, like how being at an all-time high doesn't necessarily mean it's more risky, right? Like we just saw,
Yeah.
like it went on for 2 days. Once it created a higher high on the 11th, all the way till the 14th, it was creating higher highs. So I mean, like
Do,
that's a whole week worth of
do me a
trading.
favor. Pull up a daily on this chart.
Pull up a daily.
Pull up a
Let's see the
daily,
daily.
man. See how many days it's been making
All
higher
right, let's.
highs. Right there.
Oh, bro,
Since April. What
since.
was the low? Where was the low?
All
You
right, so
saw?
let's pull back a little bit before we jump into that. So
Okay.
from the 2025th in
Right there.
October,
Yeah.
you know, it just consolidates. Like
Clear.
it doesn't know what it wants to do, right? But it's not creating lower lows. I mean, as you can see, it is still like testing these high ranges around 77, 7,766, 77 here. So it's in this range, and then it finally pulls back at the start of the year. So January, February, okay. But bro, what, not even a month later? A month later, you hit the all-time high again
Right there. Right.
within a
So
month, bro, like
when was the
16
low?
days.
What day was the low? The first? Oh, right
Are you
there.
talking this one?
Yeah,
March
that one.
30th. So
Come
as
on.
soon as, dude, as soon as not even like the start of May, like the end of March, the very last day, we see this bullish engulfing candle, and
Dude,
that it starts to take off. So then, like immediately within 17 days of May, it creates a higher high. And then ever since then, it's like every week it's creating a new higher high. Boom. Almost every other day it's creating a higher high too. So, but like to be reasonable, let's just call it every week it's creating higher highs. Lately it's been, you know, the 11th, 13th,
13.
14th,
Yeah.
like that's 3, 4 days in a row right there. So I mean it's fascinating. I'm like there could be a pullback, 70 to 70 77, which was like that range that we saw back in, since 2025 at the
Let's
start of the year.
let's
But
like break this down, right? So after the 30th, you get that engulfing, right? Say the average day trader, or the ones who zoomed in on intraday, the 1 minute charts and all that, like, and like like do they feel do you think traders feel like the market's running without them during this recent bull run? Starting from the first, and then it just started. Look at those engulfing candles that it made on the beginning of April. Like we're zoomed in, right? Day traders are zoomed in these particular candles, and then market just keeps going up. Like what do you think is going through their mind? And when we blast through that recent high of 70,000 or 7,077, like what is the psychological thought there of the emotions, the
yeah, I mean, I think people feel like they're missing out, like it's FOMO, right? But like just to caveat off of that is intraday trading though, like the 1 minute charts, there's I mean, we could see the wicks here. There's pullbacks and there's always opportunity when you go into tighter time frames. However, that doesn't mean that like there's not emotions at play when people are looking at the higher time frames. And like I talked to someone and they're like, "Oh, the all-time highs freak me out. Like I don't know what to do at these levels." And I mean, I want to hear your thoughts on what you would tell someone, but I tell them like you just got to keep trading the same. Like that's the bottom line is like you just got if is the plan there, it's always going to be there, but maybe there's not always opportunities for your plan to enter, right? So you just got to be patient. And if it's not there, don't force it. And I think around these levels is probably where a lot of people take are force things, They
yeah,
try to rush passing a prop firm or they rush trying to make more money here, try to capture the whatever's remaining, right? To
yeah,
see if like they could get in on it.
the late the people get in late, and that's what makes our market uh, great to trade, because like there's so many participants, so many viewpoints, and we're all colliding at the same levels, right, with different trade theories, ideas, directions, biases. What we're seeing with these candles is that it's literally just putting together everyone's thoughts, human psychology, and putting it in a chart, you know
Yep,
and it, like, time and time, like,
exactly.
if you do historical look, like, from the years, and you start from like 20 years ago, you're gonna just see the different cycles, and market makes new highs. We 2007, 2008 crash, boom, 40-50% drop or whatever. Then we had that brief crash, I think, in, was it 12 or 2016, Trump's first election night. That was like a big crash. You were watching that, market dumps, hey, makes new highs again, and it's just like, oh, I guess over time and experience, people will start understanding and not be like fearful of, like, oh, it's the market's making new highs today. I think they're gonna have to always go back like what you mentioned earlier, stick to their guns, stick to their original trading plan, stick to the correct framework, and not get caught up with what the market is doing, not putting too much weight on it. Like, yes, price does tell you, like, it's the ultimate piece of information, but if you have the correct process and framework, your emotions should be just steady, calm, relax.
Yeah, I mean, it makes you think too that isn't America like the biggest economy? I don't know where China stands, but America and China, we could agree that
We
they're
are
both like top dogs,
US.
right?
Yeah.
And that's why going to like, if like in a war aspect, geopolitical aspect here, if China and America go to war, China would lose that customer basis. We're definitely going to put restrictions on buying things from China overall. A lot of Amazon products, a lot of people buy stuff from Temu, which is China's version of Amazon. And for America to be cut off to buying, or our money going to China does not want that either. But the point of this conversation is like we're betting on America's economy. Like when we look at indices like this, the ES, the top 500 stocks of the United States, we look at MNQ, that's the top 100, I think, or same
100.
similar, but like the top tech stocks, right? Industry. We're betting on America. So when a person is calling for like, oh, it's going to drop or it's going to go bearish, like on the bottom line, you're really betting against America. You know what I mean? And like, whatever your political view is, whatever you lean on, like that's essentially what the belief is like, okay, I want the market to crash to make money. And like, that's never good. No one wants that. But it's when, like, we have a lot of institutional traders, like big names, right, that are calling like, hey, there's a crash that's going to come. And they constantly they live and breathe that mentality. And it's like, if it's not here, I don't need to worry about it. As a trader, as day traders, we don't have to worry about we just tag along the trend. I mean, that's bottom line. Is like, we're not institutional traders. We don't have that institutional power. So might as well let the institutions decide and the market overall decide, and then we just tag along and ride along. Maybe I went on a little random ass rant there, but I did add a VWAP to the chart here, and that is the most recent low anchored VWAP. If you remember the start of the conversation, I had it on like the 15-minute, where price rejected that 15-minute VWAP at the most recent high. Well, check it out. You could do the same way, and this is the power of VWAP. So this is like another way we could use VWAP as anchor points. You could anchor it at the most recent VWAP. I'm not saying that price will do anything, because we never know, but this is a high probability that price will test these levels where like the most recent high happened around 70, 77. And then the VWAP is right there as well. Like price could very well hit that level, come or pull back all the way down, and then go back up and create another higher high, just like how it just did. I mean, the market overall is patterns. Human nature is patterns. We could, to a degree, predict human nature on what will happen. And like, it's just not, I guess prediction, I'm sorry, is not the correct word. Probabilities, right? We're basing off like, what is the probability of price pulling back here? And I don't have the numbers for it, but I want to say like, this is more than likely going to happen, that we will get a solid pullback. And this is to lean into the fear, like the unknown. If we miss that bullish trend in the beginning on that first run, there's a second opportunity here that could be presenting. There's always going to be a second opportunity, whether it's now, a month from now, or even a year from now. There's always going to be opportunity in the market to jump in whatever trend there is, or make money in whichever direction.
Yeah, and that's pretty cool how you pointed it out with the anchored low VWAP, and it's just matching up,
Like, let's go back to that 15 as you're discussing. Like, look, there it is.
There it is.
So this is what we discussed in the beginning of the podcast. like that on the 13th, the high of day VWAP. I'm gonna rewind it so it's not so confusing. Like, look at that, like, bro, that is, I don't. That's not textbook for my edge, but I'm sure someone was traded this. I mean, obviously there are traders that traded this because look at how beautiful that looks in hindsight, right? Everything is so easy to look in hindsight, and that's where the technical aspect of being a trader is knowing how to take action when the market presents an opportunity like this. Like, I'm going to go back all the way to the 13th. Like, how do you know to go long here? Do you have the if you have the edge that says, hey, go long here, do you have the kahunas to actually take it, right? Like, a lot of traders be like, I don't know, we just hit a double top. You know, it's bearish right now. It's below the all-time high. Like, I don't want to trade this right now, you know?
Yeah,
And then
which is valid at at
yeah,
the
it's
time,
valid,
right?
and then
Yeah,
boom, like in hindsight, you're like,
there you
I
go.
missed all that, right? So it's, but that goes back to like, bro, if this was your edge, right? If like we were talking, if you were talking to me, you'd be like, bro, was this part of your edge? I'll be like, yes. You're like, okay, why didn't you take it? That is like a human emotion that needs to be worked with as a trader. Like, you need to know why didn't you take this trade if this was part of your edge, right? Like, you would call me out
Yeah,
on that, and that's what we need. We need accountability partners like that.
yeah. I mean, the other aspect, just looking at this particular chart, you'll have a lot of, like, if you're buying the breakout, you're buying at the top, which is at 74.54. You're not getting in at that VWAP level. You're buying when the price breaks above. So you would get in, just about now, right? So like that's where that trade would be. But at the same time, now you're looking to catch a runner, right? So if you just fast forward, where does this price go, right?
It goes, baby. It goes.
You know, and so
So
either entry, uh, the main thing, right? Those are two entries we talked about, and of course, like price comes back down now. That's where we're currently trading at, but the whole idea is what we're trying to say is have the framework, have the total process for the edge. There's no perfect edge or holy grail. Like these two examples are totally fine strategies, ways to approach the market to capture the move, right? Because we had two different viewpoints, two different um what do you call views of looking at, and of course the trading plan would be a little bit different. you know uh I don't know if you would have went level to level if you bought off the VWAP. Like where
that is
would
a tough decision. I was gonna say,
yeah,
so when it is a handoff, like what we're seeing here, or even a bounce play,
yeah,
that's in our playbooks for HTA, it has to be ATR, bro. Like, it it has to be real market data, not like a level to level. Because you're not trading to a level. When you're at all-time highs, you're not trading to a level,
there's
obviously. You
nothing
can't
to trade against. Yeah,
there's nothing to trade to, right?
yeah.
We're in complete unknown territory, and that's where the ATRs come into play, bro. And like, that was a game changer in my trading. So adding the ATRs, which I just did this year because of you, it'll help. But another thing to add too, when we are at all-time high, like, this isn't it's not outrageous, but it is a crazy stop loss distance, and but it would be the safest. So a tip when we are trading at all-time highs is maybe extend your stop loss. That's another thing that you could do, because it is far compared to like your regular trading. You just got to trade a little bit safer, maybe even downsize your risk, right?
Hmm.
So like, that is
Yeah.
just whatever keeps you longer in the game, because again, we don't know when the all-time highs are going to happen. We don't know how long price will go. We don't know when price will pull back. We don't know anything. Like, that's the whole point of being a trader. Like, we are trading with uncertainty, confidently with uncertainty.
Confidently. The thing you do know for sure is how much you're willing to risk on this particular trade.
Yeah.
That's the thing you know for sure. You know where to put your stop loss. You know where you're gonna get in or whatever filled. You know where your stop loss is. Okay, that's the biggest thing you can control, and that's the thing we always make sure our traders know is risk management. You know, and just making sure we're not moving it as we get in the trade. We're not making it larger because we think this. You know, we have a plan, and when a signal rises, we execute it. We always use the stop loss, okay, and we just adjust it accordingly to the plan, whether the trade wins or loses. You know, like the main thing is following the right process.
Yeah, you mentioned that like there's no holy grail and there's no perfect trading plan. I agree with that. However, I will add this, that there is a perfect trading plan for you, in the sense that, like, for example, Glenn, and I always bring it up. We always talk about it in our podcasts or YouTube videos. We trade different. Glenn and I trade different. But my edges and my plans for me psychologically work great for me. Glenn, on the other hand, works very well systematically, and he has his edges that work great for him. We have traders. We all have our own edges that we prefer, and that's the edges we need to dive into. So that is there are perfect is not the right word, but there are right edges that fit the right personality, if that makes sense to those listening. Because once you find your edge, it's almost like, wow, I want to trade this way. And sometimes you find it in the beginning and you come back to it. Like EMAs, for example. You know, I started with EMAs. I stopped for years, and now I've incorporated it again into with the VWAPs, adding another filter. And so now it's all coming together, right? And so I would say, like, there is that system out there that's for you and your personality. You just got to keep testing, though. You got to gather the data. You got to keep practicing, you know?
And for those, I got to put in a little plug for us. For those who want to know what kind of trader profile you are, where do you fit in the whole scope of things, go to our website. Take this 2-minute survey at the top, right? And it's a quick survey. Let me share this one. So once you click it, you go here, you find your trading style, and this thing is free. You'll get a report emailed to you, and it's gonna give you an idea of where you fall based on the answers that you're selecting, because it's based on your personality, you know. And because if you're a position trader, you like long-term stuff, there's no reason for you to be looking up scalping type of trading, you know. Same for swing trading. If you're a swing trader, you shouldn't be looking at intraday trading or day trading, because you're not gonna be able to, like, maybe you'll be able to kind of tweak things to make it you. But if you were able to just take this quiz and find what kind of profile you align with, that will kind of get you on the right foot with learning more, you know, kind of directing you in the right path. So check this out. It's a free profile quiz on our website. And that's how you'll get your trading profile.
Great, man. That's awesome.
Yeah. But all-time highs, people, we're going to get it. It's going to happen.
It's going to happen multiple times. Always going to happen.
Cycles.
As long as you're a trader. Don't trade out of fear, everyone. Like, just keep trading your plan. That's all we can say. That's when it's all-time highs. The biggest takeaway: check your risks, trade the plan. That's it. That's all you got to do. Sounds simple. Easier said than done. Easier said than done.
Yeah. If you don't have a plan, you got to work on that. Don't trade.
Yep.
Thank you guys for listening to this episode. Hopefully you found some value. Share it, subscribe, follow us on our podcast and YouTube, and thanks for listening.